Okay, welcome back, guys. Welcome back to the class once again. Today we're going to be looking at how to calculate your pip size and how to get it to understand what you are risking in the market and what you are going to be getting. Tags what we call the risks to reward. They get it. So we will not be looking at all that right now. Okay, so quickly we'll look at the theory part of it before we move into the practical part of it. You get it? So now let's get into the topic. Understanding pips and lot size in the forex trading. A detailed guide for beginners. Okay, so what is a pip? What it is a pip, right? Pip stand for points in percentage. It is the smallest price movement in forex. Most pips, 1 pip is equals to 0.001. Example, Euro USD. Okay, while other pips, Euro USD is 1:1000 or 1:101. Okay, that's 1001, right? So now GPY pairs, okay, 1 pip is equals to 0.01. Example, USD JPY from 145 to 145.20 to 145.21. Now this whole thing will look somehow, well, we'll get into details when we start the practical aspect of it, right? So how to calculate pip value. Pip value depends on currency pair, lot size, and account currency. Now, what does it mean by currency pair? Which currency pair are you trading? Like what we'll get from the transaction, the Euro USD, that's the pairs that has to do with the USD pair. Okay, Euro USD, GBP USD, CAD USD, and the rest of them. They get it. Which currency pair are you trading? Okay, pip's value depends on what currency pair. Lot size. Now, what is the lot size we are going to enter this market with? If you have been following this class, you will see where I discussed about the lot size. Now, account currency, that has to do with your account balance. What is the account balance? The equity you are trading at that particular time. Now, standard pip values on USD account. Now, what is a standard lot size in the forex market? Okay, you have to understand it now. A standard lot size has what we call the 100,000 units. That's equals to $10 per what? Pip. So a standard lot size starts from what? $10 per pips. Now, mini lot size has 10,000 units and it starts from $1 per pip. While micro lot size has 1,000 units and it starts from what? 10 cents per pips. Now, example, Euro USD trade, buy one standard lot size of Euro USD. That's entry should be 1.1000. Now, we'll go into the practical, you understand this aspect. Okay, the easiest price will be at 1.1020, which means the 20 that tops up at this first entry, which is at 1000, is the 20 what pips. Now, pip value is $10 because we use the standard lot size, which is $10. Now, the profit made because the market moved by 20 pips. You can see our entry and our exit. Our entry is 1:1000, while our exit is 1:1020. That's 1020. That means if you look at it, they say the pips is 20 pips times $10 is equals to what? $200. Okay, so you understand this right now. Okay, when looking at it, you have to understand what it is. But when we start doing the practical, you get to understand it. Now, using pips for lot size calculation to calculate points to calculate position size, you need one, account balance, two, risk per trade. Now your account balance, what are you trying to risk? Okay, how much are we trying to risk? In this account balance we have 3, stop loss in pips. Now 4 is the what? Pair being traded. Okay, so using pips for your lot size, you have to get these 4 things in check. Okay, account balance, your risk per trade. What am I risking in this trade? Okay, I want to risk, my account balance is $100 and I want to risk $5. That will give you the pips you are going to lose. Okay, and then the pair being traded. This is the formula to calculate it. Lot size equals to risk slash stop loss times pip value per lot. Okay, hope you guys are getting it. Say the formula is what? Lot size equals to what? Risk. Okay, so your lot size should be what you are going to risk in the market. Now, stop loss times pips value per lot. Example 2, positioning what? Sizing. Account is what? 1,000. Now they are giving you an example of what it means. Account size is 1,000. Now the risk is 2% of the $1,000, which is $20. Stop loss should be what? 20 pips. Now they are risking what? 2% of the account, which is $20 of what? That $1,000. Now their stop loss should be what? 20 pips. Now they are going to be using what we discuss at the first place, the what? The micro what? Sorry, what we studied here as what? What is that? Standard lot size and the rest. Okay, what we call the mini lot size. Now his lot size is starting from what? $1, because it's going to risk 2% of the account. Now the stop loss is 20 pips, which means once the price moves by 20 pips, he's going to lose this $20. Okay, against him. When he moves by 20 pips upwards, he's going to make 20 what? Dollar upfront. Now pip value, that's standard lot size. You see it, it says $10. Now lot size is equals to 20 divided by 20 times 10 is equals to 0.1 lots. That's $1. Let's go into calculation so that you guys will understand what I'm saying here. Let me get my calculator. Okay, so this calculator. So let's calculate this so that you get to understand it clearly. Now, so 1,000 times 2% of it is $20. Okay, what we are going to risk in that market is this $20 you are seeing here, right? Now we're going to use what we call the mini what? Lot size, right? We're going to be using the mini lot size. Now inside this mini lot size, okay, we're going to be dividing it Okay, we're going to be dividing it by 10. Okay, it will now give us the lot size to go in with. Now we already know that what we are going to be using is mini lot size, which is $1. So let's divide this by 10. Sorry. Sorry, this is not okay. So the lot size here is 20, is equals to 20 divide. So what we are going to be using is this word, the lot size, which is the mini lot size, which is one lot size. Now if you check it here, it says what the lot size is, what is equals to 20 divided by 20 times 10 is equals to 0.1 lot size. Now it gives you an example here. Trade your, that means the lot size you're going to enter the market is what we call the mini what lot size, which is $1. Okay, now this is a quick reference, the last part. Okay, this is a quick reference. Account risk and the stop loss, okay, and the rest. So you guys to see it, the $20, the $50, and the rest, they get it. So it has so on this using pips for lot size calculation. Okay, so here we're gonna be starting our what this where we're gonna be taking off to our practicals. Okay, so this from this example 2 where it shows you. So let's head over to our calculation right now. Okay, let's head over to our calculation. So I'm risking 0.1, that's the minimum lot size. Okay, times it by 20, this is 1 cent. Now sorry, okay, I'm using one lot size, which is $1, times it by 20 will give it. Go over to our trading view, so I'll show you the example of what that pips is. Okay, so you can actually refresh yourself from that theory, but let me just do majorly the practical on this trading view so that we can be able to catch up. I don't want the video to be that too long, so let's just do a quick recap on it. Okay, so this is my watch list. Okay, so you can see here we have Euro USD. So let me just go over to my charts. Let me go over to my chart. Let me get that Euro USD so that we'll use it and do what we, because that's what they use as an example there. So okay, so this is Euro USD. Now if you check over here, let me show you guys something. Okay, so if you check over here, look at it very well, you understand what we just studied in our theory. Okay, where it says Euro USD has what we call 1.1 thousand. Okay, that's what it is. Okay, 1.1 thousand. That's what they use as an example, right? Now, currently, if you check out this market, you will see this red stuff here. Okay, you see that this market it moved is at 1.13413. Now, this is how to calculate it, right? If this market now currently has 1.13409, okay, moves to this level, which is 1.13450. How many pips did it occur? So let me get the tools I will use for that right now. Okay, the tool is called, let's go to our toolbar. Okay, let's get it. It's called price range, right? It is called the price range. So you can just search it over here, get the price range. Then I'll just drag it from where that thing started to that 150. Okay, so this is the 150. Sorry, I'm trying not, okay, let's just leave it at that 151. Okay, so if you watch very well, okay, you will see that I started from here, then take it over to here. So you can see that I started from 1.13407 to 1.13451. Now, and in total it's giving me this thing 4.3 what pips. So this is what the range gives you. Do you get it? This price range just gives you what the pips, without trying to calculate it using this price movement here. You get it? It makes it very simple for you. Or you can use what we call the ruler. Okay, let me get the ruler. You can see it, measure. All right, you can see the measure here. You can see this measure, so just use it and just drag it up. Let's measure where I started, so that you get to, you can see it. It's just the same thing. Okay, I think I overdrew because that, you can see it. It's almost the same thing, right? Though you didn't get to it, but you see that it gave out the same measurement, 4.3 and 4.3, because now we are in 15 minutes time frame. So the same thing occurs in that. So now, coming to I saw some question people were asking me, how do I mark out my entry and all of that? Okay, so now we're going to be using this tool called the long and short position. So if you search down here, you can see them. If you search here, I think it's under this trend line, but I added them to my favorite. It's not under this trend line. I think patterns, right? Okay, yeah. Just Just come over here and search. I think you will see them. So this whole thing here has, yeah. So this forecasting and measurement. So this is where you see those both the price range I talked about. You can see it here. This price range. You can double tap on it and add it on your favorite. So this is it. So you can double tap and add it to your favorite because I added it to my favorite. So here is my favorite. You can see it. Here is my favorite. Okay, so I have it all. That's what you see. This whole thing is what you are seeing. Is what you are seeing here. That's what you are seeing here. Sorry. That's what you are seeing here. Okay, those things are added on my favorite. So you just pick the tools. So the one I'm gonna be using now, let me go back to. So the one I'm gonna be using now, okay, is what we'll call the long position. Now I want to get a buy position here. So I'll just drag it. Simply just drag it and come over. Let's say I want to enter this market here. Okay, I'll just drag it up. So at the end of this is my TP, while the bottom line, this ash side of it is by SL. Now, how do I measure it? Let me show you something. Here is my SL. Here is the end of my TP. Now, how do I know how many pips SL this is now? Okay, so I'm going to be using this price range. I'm not going to be using ruler. So I'm going to be using this price range. I will not drag it to where the ash color started from. I will now put it down. So you can see what I'm risking here is 6 pips. Now let me make it 10 pips. Let me make it up to 10 pips. Sorry. So okay, this is for the class actually. So you can see that the total of here is minus 8 pips. Now let me get the rulers and also measure it so completely. I get the ruler again. I place the ruler at the edge where that ash started. Your own might be red. That's one thing about it. Yours might be red. So now not drag it. You can see it. Minus 9. Now let me show you something. You can see this thing here. That's the pips. This at the end of it that is showing minus 9. That's telling me that I'm risking 9 pips here to get how many pips. Now let's check out how many pips I'm going to be getting at the end of the day if this market should go my way. So we'll not take it. So I'm risking 9 pips to make 33 pips. So how many pips am I getting at the end of the day? 33 pips. I'm risking 9 pips to make what? 33 pips. Let's say I'm risking 10 pips in total and I'm making 33 pips, which means I have made what we call 1:3 of my token of what I'm risking in the market. Let's say I'm using a mini lot size. Okay, let's say I'm using, okay, let me bring it to 30 pips. Oh, yeah, here is 30 pips now. So let's say I'm using a mini lot size of $1, which is I'm using 0.1 lot size in the market. Now I'm risking 10 pips, which means I'm risking $10 in the market. Now with this risking $10, which is the hash part of it, 10 pips, now making 30 pips, which is what we call 1:3, which means I'm risking $10 to make 30 what dollar. So if the market goes against me, I lose what? $10. If the market goes in favor of me, I make what? Extra $30. Do you get it? So this is just how it works. So with these tools, it's very, very simple for you to get your pips. You don't have to worry to start calculating things with this whole line. It will take a long lecture for me to teach you on how to navigate calculating your pips with this, right? So you can see that in GDP pairs. Let's check Euro JPY. So you can see an example here right now. You can see that um, this JPY pairs started from 161 something. So the same thing we taught on the theory is the same thing you're going to be seeing here. So you just have to practice what I just showed you now, and you get perfect day by day. Okay, so if you still have any other question, you can still ask and I will look into it. Thank you and see you in the next class.